The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, how you doing today? This is Darrell Martin, your host right here on the Diagnostic Trading Hour. And let's check out where the markets are at right now. All right, well, we got the S&P is currently down just a couple points right there, just below settlement. And it's been pushing back up, trying to hit it all morning, missing it by just a couple ticks. If we go on into the Nasdaq, it is positive. It's countering all the other indices right now. It's up 12 points. We got the Russell up 2.9, and we got the Dow down 21. Gold is currently up 12 points. We got silver is up almost 1% on the day. Copper is down about 0.5%. Oil currently up just 21 cents compared to settlement. Natural gas up 3.5%. We got corn up just a couple dollars. We got soybeans down $4. Euro dollar currently up 8 pips. Pound dollars down just a mere 4. Aussie dollar down 16. Euro yen down 21. US yen's down 23. Pound yen's down 34. The dollar CAD is currently up 4 pips, with the dollar franc down 10 pips on the day. Of course, that just shows the settlement. The settlement, it doesn't tell us the story of what's happened in between. But overall, sort of some flat markets today. One thing to remind you of, I talked about, that this last week, saying, this was a low news week. So you can get some nice smooth trends, or you can get some, just sort of some chop. Okay? So, but you're usually not going to get just the massive moves. There'll be a few things that'll move for you, but just don't be surprised. From one week to the next, you got to think about not only hour of the day, session, but also, what's happening that week, what's happening that day that's driving the market. And today, being February 10th here, we had the AGS report come on out. So let's go ahead and first look at that. That was released today at 12 o'clock, the WSDE report. So I want to pull them on up. Let's check out corn and soybeans. Flip on over there to those. There we go. And so we got a nice pop right there off the report at noon. Got about a half a deviation move, and we did move a deviation high to low. Look at that right there. So see right here, this little orange line, the blue line is the high to low move on the day. And, what you can see is if we go and we track the low to the high, that measures basically about 9 points. And if I went in and I measured one deviation down to settlement, then we're going to get, not even quite 9 points. So a little bit over one deviation high to low. And again, I post those every day inside the scanner. And look at what happened when it moved that one deviation high to low. Turned right back around. So, we just want to be aware of those things and take advantage of those. So that way, as we're doing these different trades, we know where to take profits. We know where to expect potential reversals. Don't just grab a reversal just because. But we know where to take potential reversals. And we're really looking for them when we see volume spikes. And we did get a volume spike starting to take place right there, and it finished off. Market started flying on in, and then bam, turned around on us. I see that maybe even a little bit better if I back on down to 5 minutes. There you go. So 5 minute, you can see the 5 and 10 minute volume spike lining right up, right at one deviation. And then we look for a sell, a go short, or a in the money premium collection trade, or there's a variety of trades. But right as this bar right here, okay, is broken, that's the low is broken on the next bar on the 5 minute bars. I always use the 5 minutes, by the way, for this strategy. And when it breaks the low, that's my sell signal. Okay? Also would be if I was in the trade, be looking at my stop loss as well. Let's check out soybeans. Let's see how they fared on the report today. And on soybeans, we had a pretty big move. So we got a large move. Let's see. What do we get? We got 1.5 deviations high to low. And again, as it came down, boom, we got a volume spike, flew back up, flew back down. So we didn't get that reversal entry. and came back down again, sort of popped up, but now looks like it's head right back on down over there again. And so that's probably what we're going to be seeing for a good chunk of the day. And on soybeans, just a slight trend on down there. And I mean, you can tighten it up. You can look at bigger time frames. You can look at smaller time frames. We can go down to say 3 minutes. And anytime you're going into news, I mean, I'll even back down to 1 minute when I'm looking right at news. And that'll help me, catch and see the trends a whole lot clearer. So when I'm heading into a news, I don't want 10 minutes. 10 minutes, the thing's over. So right there, you see we actually get a short, and then, boom, it pops right on down. All right, well, that gets us caught up on our ags. And I just wanted to bring that one up first since that was the main news item of the day. As far as, what other news we got going on, let's knock out our earnings first real quick. We're going to have Coca-Cola. It's going to be releasing. It's in the Dow. That'll release tomorrow morning on the Wire at 7:30. Press conference, a little bit later, but the Wire right there at 7:30. Cisco will be coming out on Wednesday at 4:05, so near the close, and that's in both the Dow and the NASDAQ. So that could affect either one of those indices right there at the end of the day. Of course, Wednesday we'll have oil inventories at 10:30, and Thursday we'll have natural gas at 10:30. We have a few topics on, not a whole lot, but as far as let's see, let me pull up our actual big trades of the week. But the big news of the week is going to be Yellen's press conference, not really press conference, but Senate committee hearings. That's going to be our bigger news of the week. And see, what's her stance on everything? Hey, unemployment dropped, but NFP went up. QE's been scaled back twice in a row now. Is that going to continue? What is the Fed going to do for its mandate on, raising unemployment while lowering unemployment, at least the number that they met, while at the same time, maintaining interest rates. And so that's going to actually happen tomorrow, okay? Tuesday, 10 a.m. is when that number, or not that number, but that is going to come out. And again, two parts are going to come out. So this is a little bit different. There's two different times she's going to do this. And this is the monetary pulse report. This was the one before the House. Okay, the other one's going to be before the Senate. But the one before the House, the one that's tomorrow, her testimony is pre-written and is going to be released at 8:30. So it's very important to understand that will come out at 8:30. Okay? When that comes out, that'll have an effect. And then she'll read the testimony before the House, and then there'll be a Q&A. So at 10 o'clock, she'll read it, and then there'll be a Q&A. And then, of course, that can cause a lot of volatility based on, what she says and how she phrases it and how everybody takes it. And feel free to, see that on C-SPAN Live as well. And then she's going to go in before the Senate. And now in this one, they're not going to release it 90 minutes before. They're going to release her testimony at the exact same time as she starts. Shouldn't be too much different, I wouldn't think. But, who knows, again, different questions come in. So at 10 o'clock, she's going to go before the Senate committee and Senate Banking Committee, and she'll be testifying and answering Q&A on that. So that's going to be a couple, obviously not measurable, but definitely, the bus is coming, look both ways before you cross the street type, events you need to be aware of. Now, as far as news reports, pretty light week. So we really have just a couple reports that we're looking at right now. And they're not even, necessarily the biggest reports. So, but we do have the Australian employment change report. That's going to come out here on the 12th. So that'll be released Wednesday in the evening at 7:30. Okay, obviously affecting the Aussie dollar and Aussie yen. Out of the two, more often than not, the Aussie dollar is actually the better trade. 75% of the time, it's broken 50 pips, okay, in the last 2 years. And that's actually increased. Over the last 5, it was only 42. So it's actually got more and more volatile. And in the last 2 years, the average high to low is only 52. So, I mean, it just barely breaks it. All right, so be very aware that we really right on that 50 pip, range for what we're looking for. And let's see, the next one we got is we're going to have the core retail sales. That is going to happen on Thursday, and it's going to be released at 8:30 in the morning. It'll also come out at the same time. You got core retail, and unemployment claims. And then, shortly after that, then Yellen is going to testify. On that report, our expectations are pretty low on everything except for euro dollar. That's about the only one. You could obviously group euro yen in with that, but 70% of the time it breaks 50 pips, and the average move is 62. All the other pairs, some of them have different decent average high to low ranges, but they don't really have that good of probability ranges of breaking at least 50. And you need that 50 pips to have a decent straddle or strangle trade when trading on Nadex. Now, if you don't know what Nadex is, then hop on over to TFNN.com and get a free demo account. It takes about 15 seconds. Just click on the Nadex banner on the top right side of the page. Click on Trading and Demo Trading Account. Fill that in, hit Apply for Demo, and they'll send you an email. You got to put first name, last name, like phone, and email address, and choose your username. That's all you got to enter. They'll send you an email with the username and password. You can log in right away. To get started trading it, you can just go to trading platform. Sorry, not trading, but go to create account. Go to create account right there, and you can open up a secure account. It only takes about 5 minutes usually to go from start to funded, and the minimum funding requirement is $100. Obviously, if you're going to trade live, you're probably going to want more than $100, but you actually can do trades with only $100. So you can do trades. You don't have to worry about $25,000 day trade margin requirements like you do on stocks. You don't have to worry about having 25 grand. You don't have to worry about getting a signed call, like a signed stock, or having to deliver stock like on calls or puts. You don't have to worry about last delivery date, last trade date, all that stuff like you do, and making or taking delivery on futures. You don't have to worry about margin calls like you can on multiple option strategies, futures, margin stocks. So there's a lot of benefits. Your risk is really controlled because whatever your max risk is, always put up to place the trade. So if your risk is $40, you put up $40. And your leverage, it's very effective leverage. It's very high leverage. I can go in sometimes and do 500 to 1. Sometimes it's 50 to 1. Sometimes 100 to 1, whatever my risk is. But if I compare them apples to apples, with the futures or with the forex markets, get very high leverage. But without that leverage, like it's a one-sided sword. Okay, so the other side is dull. Doesn't hurt as bad. So if I'm getting, say, 100 to 1 up, but I can only lose 15 down and I can't be stopped out on the trade, or even if I can lose 50 down and I can't be stopped out on the trade, then, that leverage doesn't hurt as bad going the other way. And it doesn't ever, catch you off guard. Also, you can't make that mistake of moving your stop, because your risk is capped. And if you've been trading for any period of time, you've moved your stop one too many times thinking it was going to come back until eventually you just had to eat it. So, or worse yet, it worked for you, and you developed a bad habit, and then eventually you did eat it. So with this, you don't have to worry about developing those bad habits, and it'll help you break them quickly. And all the while not being stopped out. So, anyways, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. And so what we're looking at right now is just going through and talking about straddles and strangles on Nadex. And let's see here. Got one more thing. Bring that on up. Okay. So, again, you can get that Nadex account set up. It's easy. It's quick. Doesn't take much time at all. And it's not near as complex as people try to make it. Maybe not as easy as you want it to be, but definitely not as hard as you think it is. And a way to look at this, I saw a discussion going with some traders. It was a pretty good discussion. And it was about looking at verticals versus binaries. Okay? And it's pretty interesting. Verticals, like a call vertical on Nadex is priced the same as buying a binary as far as risk, reward, payoff, everything else. And so it moves with the exact same model as a vertical. And so you're looking at that and you're like, well, why would I do a binary instead of a vertical? Well, here's a few reasons. Now, I'm talking about on Nadex. I'm not talking about binaries on over-the-counter bucket shops and all these Cypress, gimmicks and everything else. But on an actual, exchange regulated by the CFTC like the CME is. Why would you do that? What would be the advantage of not just doing a vertical instead of that? Well, there's a few things. One, you're only going to get, at best weekly contracts on verticals. And, if you've been trading for a while, if you traded options for a while, and you're looking at verticals, what happens on that? Well, you have, a lower delta because you have a lower gamma because you're waiting on it to get closer to expiration. And as it gets closer, then it speeds up. And so you only have, 1 week. Well, you could also do weeklies on binaries. So if you want to put, apples to apples and side by side, you can do that. And you'll get the same movement. Your fees are going to be dramatically lower. The example I was looking at, 2,000 contracts, and it was like $680 in fees, and that was using like a cost of, I want to say it was an $8.50 per trade plus 0.15 cents an option. Okay, so pretty low commission rates, and still, compared to $18 max for round turn on a binary, so you're saving on your fees. Bid-ask spread, depending upon the vertical and depending upon the binary, maybe a little bit more on the binary, maybe a little bit more on the vertical. Just depends upon which one you choose. But you can do dailies. Okay, so imagine being able to do vertical trades every single day. Okay? Imagine being able to do them every hour. Whether it be, debit spreads, credit spreads, iron condors, making butterflies, whatever you want to, equate it all to. Imagine being able to do that every hour or every day, not just one time a week. Now, again, you can do it one time a week, but you could also do it one time a day. Imagine using dailies to hedge off your weeklies. Imagine using binaries. And I know a couple big traders on Nadex who actually, they just use the binaries to hedge off their short strangles. So they use, because they have to use the same pricing model. So, at least as verticals do. So, you can use them as hedges. You can use them as a way to, intraday and daily trades. You can go in and do them more often. You can do them on more hours. A vertical, you're only going to be able to do that unless you're doing it like on futures, whole different, animal. If you're doing it on futures, you got to put more money. They're going to cost more. But, as far as, comparing them to, say, like spider verticals or, other ETF verticals like IWM or, whatever, diamonds and things like that, you can't do them at night. So what happens if, you're in a long and something happens at night on the euro and you can't close the trade, you can't hedge the trade, unless you know futures and forks and all that stuff, you're just toast. So you actually can manage that trade at night if you want to. You can trade at night. Last night, I'm on the phone with another trader, and we're up, just like brainstorming on 100 different strategies, and we're going through and we're talking about how to do different types of strangles and scalping trades and just different things like that. And while we're on the phone, I'm literally hopping on and I'm putting on trades for a 1-to-1 risk reward ratio where the market just has to move 3 or 4 ticks, and I make 100% return. And I made, on the first couple trades, I think I made like, $500 on one and like $250 on the other one, and, made some more on the next one. And, we're talking over the course of an hour. I'm just sitting here on my phone, placing some trades. And this is in live accounts. That's Sunday night. So, some of you who, are out there, maybe you can't always trade during the day. Sometimes I can't trade during the day. Sometimes I'm so busy, I just don't have time. So just having that extra schedule and, the time, the ability to do more trades. So a lot of advantages. If you'll take the time to learn how to do them, it could really be beneficial to you. And again, try it out demo, learn for free, and ask questions. Call in if you got any. I'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And so we're just looking through, everything, trying to catch it all up and see what's going to work out best for us here. But we got the sort of the news plan trade, not a big news week. Plenty of stuff to take advantage of. Low volatility, high volatility, straddle strangles, sometimes the trends are, they're shorter, but they're easier to follow. So just make sure you are, utilizing that. And let's see here. Now, let me go on over here. And by the way, the box spread scanner is right there. If you want to check that out, right there on TFNN, just use that little box right there and click on down to it. And yeah, you'll have access to Ask Me Questions. You'll have access to the deviation levels. You'll have access to the scanner for the binary and the spread scanner both. Let's see. Now I want to bring up a couple things for you, but we'll probably go through and do a little. This is actually a good day to go through and look at deviation levels and to show you different ways that they can be applied on days like today that maybe are not as volatile as we may like to see. So, okay, so we're going to go down, we're going to break down, we're going to look at 5-minute bars on today, and we'll go ahead and we'll start scrolling through the indices first. And so on the S&P, over here you can see very non-volatile day. We're very range-bound. So, let's say you're a swing trader, you obviously can take advantage of that, but just not a lot happening. at best you have really sort of a gap fill play that almost got filled but didn't. Pulled back down, moving on, back up. We could back out to maybe a little larger, trend possibility, but just not a whole lot happening. And let's see, let's check out the Russell. And I'm usually watching like 1, 2, 3, 4, 5, and 10 minute and hour. And I also have a couple other styles of charts as well. So here on the Russell, you see we got a nice move down, and basically came within like a tick, just a couple ticks of the half deviation level. We got a volume spike. Not necessarily a reversal trade, okay, but definitely a trade where I would be, aware that just happened, and we could go over to 15-minute bars and see it even more clearly. But just being aware that happened there on that morning, and that was just, pretty much the market open. So market ran down, and we don't always get volume spikes. Okay, we get large volume bars, but not always volume spikes. Volume spikes is when you get a large volume bar. If let me add volume. I'll show you what it is. And let's see here. Go into this, and we'll add on vol. There we go. And so you can see how that big volume bar? Yeah, it's a big volume bar, but also it's twice the size of the bars on each side. So a lot of times when I've just started to notice this pattern, but when I do see a volume spike in that first, like 5, 10, 15 minutes right there, often I will see the market retrace on back. So it sort of becomes like, we already had, it was at settlement, there wasn't really a gap fill to play, but that thing ran down, seeing it come on back up, pretty high probability. So it's not my normal volume spike at a 1 deviation or 1 deviation high to low trade, but it's more of an opening market volume spike reversal trade. And we can even go back and just to see how does the theory hold up, and look at some other mornings. So let's see here. We got to see it. You have to see it right on that market open. Okay, we don't want to see it. It's like right there. That's right on the 946. Bar we're looking at that on the open there, and I'll break it down to 5 minutes. It makes it, in my opinion, it makes it easier to see when you're looking at the 5 minutes. There we go. So we're seeing like right there at 945. So those first 15 minutes, and we can go back and just look at a few days. We've had a lot of activity, of course, in the last few weeks, so we're bound for the thing to breathe for a moment. But let me go back here and we'll just look at a few days on this concept and see what we get. Okay, so here's the previous day. We actually don't get a volume. We get a volume spike right there, 930. Let's see here. We're getting that at a half deviation line, and then we do get a pullback. So right there, 945, it does pull on back. So about as far back as it's pulled right now. And so we did get a nice pullback on that. Exact same trade. If we go over here to the previous day at 930, and let's see what we got here. Let's see, we come in, boom. We actually don't move half a deviation. Okay, so here's a difference, just to show you, like trying to put into words what I see and to explain it. And I'll go back and I'll compare, like, example A and B. But see right here, we got a half deviation move, right over here on this. It was an explosive move right there on the open, and there we go, 930. So like we got these massive moves going on. Didn't have the massive move on that bar, but what did it do? Let's see. Nevertheless, what did we get? And let's go over here. We got, it pulled back, but it basically just pulled back to the same level. So didn't get a major pullback on that one. Let's go back and look at some of the other ones on previous days. This is something I've just been noticing, starting to test out. We didn't even get a volume spike this morning. And let's see, we'll load up a few more just to see if we can. And again, you'll get high volume bars. You just won't necessarily always get those volume spikes. And I'm differential. Like, see, there's high volume, but whether or not it's a high volume, it's actually a volume spike on 15 minutes. But if you're going at 5, you wouldn't even see it. So that's why I like to watch 5, 10, and 15 at the same time as well. But we scroll on over here, and we'll just zoom in. We'll use the zoom feature. It's a lot easier. Start at the beginning. All right, there we go. Now let me zoom in on the current morning to see what we see. Okay, so 9:30, no volume spikes. So don't even worry about it. Next day, see if we get some. So 9:30, we got a little volume spike, but I mean the market hadn't even moved. I mean it did go back and fill in the gap, but there wasn't enough to take advantage of anything on that. And then let's see, we'll go next day over here. 9:30. Let's see, we're sort of chopping up. We're not really like flying up. We did get a volume spike. Like I said, that one it came back down pretty much right to the same level. So it's where the volume spike happened, but we didn't have, there's no big moves at all even before this. We have nothing happening. All right, so I'm just trying to notice any patterns that I see. And then, so you can follow along there at 9:30. Let's see. Okay, we got a volume spike right here. Notice how we did at least have a big swing. So it flew down, it flew up. We had a volume spike on the fly up, which is, by the way, right when it busted the high of that big volume bar, probably from news there at 8:30. And then it did pull on back down. So same pattern as we saw before. Let's go on to the next day. Okay, this next day was sort of flat, but then we got a big move right on the open, got a volume spike, and it did pull back up. So right there was just in, a point or so of the Russell's high. So we did get that reversal again. So, you can go through these over and over and over again. You can look at a ton of them, but that's sort of the, if I need to see a big move either on the volume spike that's happening or with it, I'd say probably by, an hour before, like 8:30. So 8:30 to about 9:45, I need to see a big bar, like a big range move, and I want to see a volume spike happen actually at, that 9:30 to 9:45 time frame. And that's when I expect to pop back up. That doesn't necessarily set my trend for the day. That's just a quick reversal, scalp trade, maybe a gap fill trade. Very simple method. And you can use this across different markets. Let's go in and let's see how well it works on a couple of the others. And and the thing is, we always expect large volume on the open, but we don't always expect large volume with a massive drop-off on the open. And that's what's happening if you get a volume spike. You get that big up and then drop back down. Okay, so this morning we didn't even get one on the NASDAQ. It still came back down, though. So the Russell actually gave us that heads up. Russell having less volume than the other three indices also can sometimes be a great leading indicator with its volume as to what's happening. Let's see here. We did have that big spike up, moved up, pulled back down from 0.7 down to 0.5, so it did get at least a deviation level to a deviation level move. Didn't pull back to settlement on NASDAQ, but it did pull back at least to that one deviation there, that 0.5 deviation. And then, let's see, going back to the previous day, getting the chop. We're not really getting the big move. We get the volume spike, and notice how with no big bar, no big price bar, what's happening? Market doesn't even turn around. It didn't look back. And you could easily use it to close below the previous bar's low as an entry, and that would have, been an easy filter. But again, I'm just looking for those big bars with volume spikes at 9:30. Let's see here. Don't really have any big bars, and we don't have any volume spikes on that day. Go back a little bit further, and these are just really simple methods. This is not like rocket science trading here. No volume spikes happening, no big moves. Let's see, we go back to the previous day, see what we got. And no big volume spikes, no big moves right there at the open. Go over here to the previous day. Got a volume spike, but no big moves. I guess you could say it went back up to settlement, but still, that just would not be there's no big bars happening. It worked, but wasn't really the trade that we're looking for. 9:30, okay, volume spike, no big move. See, it's just either trending or slightly choppy, one of the two. Not expecting a big reversal. Didn't get one. Did get that 0.7 down to 0.5. But not really big enough trade for me personally to take Like to have a little larger trades. Right here, same thing. I mean, we've had a nice big trend, but no big bars and no volume spike, no trade. So it's just one of the things you watch out for in the mornings and see if you can find it. And there's a lot of different patterns you can use on these volume spikes, but look at patterns at different times of day. Market open, market close, news reports. What happens when there's a volume spike? And it's at what deviation level? What pattern do you see? You can go over, let's check out the Dow. So over here on the Dow, we got, this morning we go down. Pretty decent size move right there. So we got, what is that? Like 50-point move. And right there on the open, and it does reverse right on back up to settlement. And let's see here. We go back, and it's just starting to notice the patterns. We got a big move. We got a volume spike. It definitely does go back up quite a bit. With that big move and that volume spike combined, we see the biggest reversal right there. Let's see, right there. You see big volume spike. This is 1:30 in the morning. Pull it on back. We go back even further. And just looking for that pattern. Big bar, big volume spike. Ideally, at the same time. See, medium-sized bar. It's not even relative. just look at the deviation levels. That'll tell you how big it is. It did pull back still, but, really small. You want a bigger bar because you want some room to make some money. We go back a little bit further. Nothing. Go back a little bit further. See if we can find a trade. Nothing on that. There's volume spike. See how flat that is? That's pointless to you. You want a big price action bar with the volume spike. Ideally at the same time, or at least 832, 945. Okay, we did get a spike there. It did pull back, and then look at all the market action, and it's not. Again, it's like maybe a quarter of a deviation move. It's like the biggest bar we've had in the last hour. So even though it worked, really wasn't what we were looking for. Not enough money to make on that trade. Make it worth your money. Okay, let's see here. See if I see any more, and then we'll check out one more. We'll go over and look at the S&P. All right, we'll look at one last day. Yeah, see, really small. Got a volume spike. It did pull back, but really small. Trade really not worth it. Okay, now let's check out S&P. And this is one of the reasons why I like to have multiple trades in my playbook. I call my different strategies or my playbook. Like I'm a coach, and I'm coaching my money, right? And on what to do on the field. And I don't want to get my players injured. And I need to know what's the right play at the right time. I don't go and say, hey, let's do a Hail Mary, and we're 5 yards from the goal line. I don't say let's kick a field goal, and we're 95 yards from the post. So you got to have the right play at the right time. And by not having just one play in your pocket, but by having several. Now, mastering each one. Don't just add plays and you barely got them down. But you want to add those on piece by piece. Looks like we got a caller. We got Mike calling about deviation levels.
Yes, Darrell. Just a quick question.
What you got, man?
The settlements every night. Have you ever looked at the settlement price from day to day as to giving you a trend based on the settlement prices?
That basically just be looking at a line day chart.
Yes.
So if we I'll open one up real quick. So give me 1 second here, and I'll open up say S&P. I'll just do a continuous. Do a new chart. We'll do a daily bar. And then we'll make it plot line on close. There we go. And then I'll make it a little thicker so it's easier to see.
I'm just wondering if that can be used as an additional...
Yeah, that's basically what it's going to look like right there. That's really, a settlement is really the same thing. If you look at daily bars, most charting platforms, the daily bar will be the settlement.
Okay.
Now, if you're looking at intraday bars, the last bar of the session won't necessarily be the settlement.
Right.
David
So
White's
they go
newsletter,
back.
The
Oh,
Technology
we'll be right back.
Insider is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, Mike, you there? I know if we lost you there. We went to commercial break and out of nowhere.
Oh, I'm here.
All right.
No.
Cool.
And just one other question, Darrell. You had mentioned volume spikes. You don't know that there's a volume spike until after the fact.
That's right. 100% correct.
Is my entry or looking at going either long or short going to be just after that volume spike and try to find a spread or a binary?
No, you're 100% right. It actually would be after the fact. It'd be, now, when I'm doing my main volume spikes, I was talking a little bit this morning about like morning spikes and stuff like that.
Yes.
But my main volume spike is when I have a one deviation high to low move. Okay. So, for example, yesterday was just an easy, not yesterday, but, Friday. Easy example. We had that big, NFP report come out.
Right.
Market, bam, bam, real quick. Literally made a one deviation up to down move in 5 minutes. Okay?
Right.
What I would be looking for is when I get a volume spike, I'm then going to look to basically, this is, let me put this in like a zone for you. So imagine this as, now this will be on 5-minute ones, okay?
Okay.
So imagine this is like zone 1, okay? And
Correct.
that's the bar before the volume that had the volume spike, okay?
Correct.
and that volume bar is half the bar after it.
Yeah.
Okay? Zone 2 would be the bar that actually had the volume spike. Okay?
Yes.
Right there. And then Zone 3 would be the bar after it, this bar right here, which had half the volume of the bar preceding it.
Yes.
Right there. Okay? So now on this bar right here, I'm looking for a buy, personally, within 3-4 bars max of this bar's highs breakout.
Okay.
Okay? And so I would literally buy on this bar like right there when it breaks that bar's high. So that's my entry. So it definitely is delayed. But basically, I'd rather, it's one of those things like I always delay for some sort of momentum confirmation.
Of course.
Some traders, are really good at calling like just bounces right off, like the Tiger Gartleys and stuff. Right. I can see them. I'm more of a I'm gonna give up a little bit of my profit to see it move back in my direction first. Now I do give up some money and I take a little more risk by doing that, but I avoid some that don't ever go back in that direction too. So it's it probably pans out the same in the end. But it's just my trading style. I prefer to see a little momentum back there, and there's multiple ways to do it. I know traders just on this network that they use the combination. They'll use like now obviously this is a different subject, but they'll use like the Tiger Gartleys. It goes down to a level. When it hits that level, they're expecting a buy, and maybe they'll make it break like the previous bars, high or whatever, got a little bit of momentum in there. But if you wait too long, you give up way too much.
Right. Right.
But yeah, so you just have to act. Now I may do a in the money binary, like down here below the low, and have a stop loss. Right. I may do an out of the money binary and target the deviation level and get out when it hits it. I could also do an out of the money or in the money spread and look to exit when it hits this level, this high, because it's like a magnet price. It's hit right there.
Correct.
I also could just look at doing an underlying trade or hedging off with spreads. But you can see right there, if you would have done that trade right there on that volume spike, whether you're doing futures or whether you're doing spreads or binaries or if you're international, if you're doing CFDs or whatever, you could have bought and your exit would have been right there, right when it hit that high of that volume spike magnet price bar.
Okay. Well, thank you, Darrell.
You bet. Did I help you out on the trend thing there?
Yes,
Did I get
sir.
that? Okay,
yes, sir.
Awesome. All right.
You.
Thank you. Bye.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.